as stocks like Apple are nearing critical exhaustion points and the fear and greed index sitting at 75 back in extreme territory. Should investors be worried about a potential stock market crash? Now, the first chart I want to go ahead and look at today is going to be the SPY versus HYG. High yield bonds versus the S&P 500. Now, we can see on Friday, we actually closed with an inside candle, but we come down here and look at HYG. Is it anywhere close to its recent highs out here? And the answer is absolutely no. Then we come over and look at the Dow Jones versus the transportation index. Now, this one's a little bit closer. We can see the Dow Jones very close, near all-time highs. We can see the transportation index trying to break out. We had this declining trend line. It broke above, came back down, and now it's trying to push back up. However, let's not forget about the yield curve. The yield curve is steepening. It is uninverted. And at some point, this is going to cause a problem for the market. Now, is it going to be this week? Is it going to be next week? Is it going to be sometime way after the elections? You guys, let me know what you think in the comment section down below. Now, we look at the fear and greed index on Friday. We are able to swing back over to extreme greed. However, like a wise man once said, be fearful when others are greedy. Be greedy when others are fearful. We also take a look at the most recent investor sentiment survey. We can see we're coming in at 45.5, and the bears have stepped back in a little bit. We went from the prior week at 20.6 up here to about 25.4. The bulls pulled back here just a bit, and we can see the neutral basically stayed roughly where it was at. Now, we look at this article right here. These 6 charts suggest investors should proceed with caution as the S&P 500 hits 47th record high of 2024. And we scroll this chart down here real quick and we look at some of the key things they want us to look at. The first one, they want us to pay attention to the equity put call ratio hits its lowest level in over a year. Now, that is a warning sign saying that, hey, maybe, just maybe, there's a little bit too much complacency in this market. Then we scroll down, we look at the next one. Investors are leveraged long the S&P 500 through the futures markets. However, these dates show that October 8th, asset managers net long position in the S&P 500 E-mini futures held above 1 million contracts for 4 straight weeks. Now, when we scroll this down here real quick, I want you guys to kind of look at this chart. Right back up here before the pandemic in 2020, you can see we're roughly at 1.1 million. And you can see right now we're just above 1 million. Now, does that mean that everybody is already on the long side and trouble is brewing up ahead? Now, another thing that is a little bit concerning as well, and this basically sums it up very easy with this statement right here. Insider buying has slowed to a crawl. So that means, you know, the big CEOs, the big wigs of a lot of companies out there, the insiders are no longer buying their stock in. If it's such a great value, why would they not want to go ahead and jump in and take advantage of these great prices out there? I think both you and I both know the answers to that. Then the next one, valuations are looking a little bit stretched. And if you look at this, the forward PE price to earnings ratio earlier this week touched its highest level going all the way back to 2021. Now, let me ask you guys something real quick. What happened back in 2022? And if you guys weren't trading the markets back in 2022, here's what it essentially looked like. And if we look at the S&P 500 from the point when it topped out all the way down towards the low, that was about a 27% drop from the high down towards the low. Then we have the S&P 500 forward price to sales ratio. However, I want to pay a little bit closer attention to this. Key technical indicator nearing overbought territory. Anything above 70 is considered overbought. Then we come over and we look at the S&P 500 and we go ahead and we throw on the RSI indicator. Now, when we throw the indicator on, notice down here near the lows, we are getting very, very close towards that 70 level. We come over and look at the diamonds. The diamonds are almost there as well. Then we jump over and take a look at the Russell 2000. Not quite as close, and the NASDAQ is kind of lagging out of the bunch. NASDAQ right now, we're sitting right here about 60. However, there's even more troubling signs ahead than just being overbought looking at the RSI indicator. And we're going to touch on that here in just a few moments. But with a little bit of good news real quick, we know that Boeing this year has been getting smacked down. And we look at this article right here, Boeing workers to vote on new wage deal that could end the strike. Is that going to be a positive outlook for the Boeing stock, or is Boeing stock going to continue to drift lower? Then for those of you that are loving Teslas out there, keep in mind, we had that gap lower, we've had that lower consolidation, and now there's even more trouble brewing up ahead. US to probe Tesla's full self-driving system after pedestrian is unalived in low visibility conditions. So is this just the start of the descent down here for Tesla, or does it have a lot farther to go? Because when we look out here on the weekly chart, to me, this kind of looks like it could be a double top pattern. Now, in order for that pattern to be validated, we must make it back down below roughly 180.97. That would validate the double top pattern. Then we could also map out and see where would that actually complete at. That would give Tesla a price projection down here at about 93.67. Now, I want to make everybody aware, Apex 7 at 80% sale off all their evaluation accounts, $85 activation fees, passing as little as 1 day. If you want to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Now, when we look at how utilities performed out here on Friday, we can see basically in the middle of the pack. However, we come back, we look at the 1 week performance, utility was the leader. We look at the 1 month performance, utilities, the leader. We look at the 3 month performance, utilities, the leader. And again, this is more of a defensive posturing in the market. This isn't saying, hey, everything is fine, let's jump aboard all these growth stocks out here. So this is something that we most certainly are going to want to pay attention to and see how it actually develops. Now, when we come over and look at the dollar index real quick, we see on Friday forming a bearish engulfing candle. Then as we dive down, we look at this on the weekly chart. Notice we've had a push up, and now when we come over here and we grab our Fibonacci retracement tool, we measure swing high down here to the swing low. Look where the dollar index has come up towards. Right up towards the 61.8 Fibonacci retracement level. So it would make sense that we start to see a pullback at this area. However, when we look at the count right now on the weekly chart, we're only on a bar number 3. Now, when we come back and look at this on the daily, how far are we going to potentially pull back? Are we going to stop at the 38% retracement, or move all the way down towards the 50 to the 61.8 fib level, which would kind of correlate with this little double bottom where the top was right there that we broke back out from, something we want to keep an eye on. Now, with the dollar starting to pull back a bit, it's not really surprising that we saw gold having a good day out here on Friday, breaking through, making another new all-time high. And let's not forget, we still have this ABC pattern completion in gold, which is going to complete up here about 27.82. Next, we jump over and take a look at crude oil. Now, crude oil can be volatile in the short term, depending on what is going on in the Middle East. Now, barring all of that, looking at the charts, all we keep seeing is new lows, new lows, new lows in terms of a per candle count. And we do have the MACD indicator starting to cross over. However, if we get back down towards this swing point over here, that could be setting up some type of MACD divergence. We're going to have to wait and see how all that shakes out. Now, as we come over and look at the SPY real quick, notice on the weekly chart, we have a little bit of a wick on the top, a little bit of a wick on the bottom, and we still have this smaller ABC pattern in play up to about 592. Now, there is a larger ABC pattern as well, and we can go ahead and draw that out as well. We can draw A to B equals C to D, and that would give us a price projection up here about 601. But for the time being, I'm going to leave that off the chart. So right now, we can see we've now had 1, 2, 3, 4, 5, 6 consecutive up weeks in a row. So we know by default, we're getting a little bit long in the tooth on that front. MACD indicator is crossed to the upside. We look at the candle count and look what we had the prior week. We had a 9 count. We'll discuss that a little bit more here in just a bit. And look right over here. We had a 9 count. Boom. The market came a bit lower. So we're going to see if that's going to pan out again this time. Now, when we dive down and we look at this on the daily chart, what do we have? Well, on Friday, we had an inside candle, meaning the high was lower than the high from the prior day. The low was higher than the low from the prior day. And for all intents and purposes, we're doing nothing more at this point than consolidating around this area. If we do get a break to the downside, one of the key areas I will want to focus on is going to be this high volume area over here on the composite profile. When we dive down and we start looking at the 30-minute chart, notice we can see that inside day a little bit clearer. However, if we start pushing above the highs on Friday, keep in mind, we still have very poor market structure from Thursday's price action going all the way back up towards all-time highs. Now, we had this ABC pattern drawn out, and I'm going to go ahead and move that pattern up just a bit, and that gives us a price completion at about 581.65. But wait, that pattern is not validated unless we take out the swing point down here. However, that doesn't mean we can't try to play a runner down towards that area as a secondary target. Then, as we come over and look at the futures markets real quick, what do we got going on with the S&P 500? You can see value area high will come in at 5912.75 with the point of control at 5907 and a quarter. Value area low being 5883.25. Now notice we have a little bit of volume that has been built out up here. And as I'm looking at this profile, what am I expecting this week? Well, I can also make the case that maybe we're going to form another A to B equals C to D pattern that would bring us back up to all-time highs at 59.48. However, if we can stay below value area high, or if we go above it and start coming back down, I want to be on the sell side of the market. You can see we've already come into this minus development area over here. We rejected out. If we come back into this area a second or third time, then that's when this point of control is going to be a point of interest for me down here at 58.31. As we look at the daily profiles, what do we got going on there? We got value area high coming in at 5908.75. The point of control, 5907.25. Value area low down here about 58.94 and a quarter. Keep in mind, during the live stream, we marked off basically the candle wick right here to the candle body. This could be an area, a magnet trying to draw price back into it. Now, if you want to make sure you don't miss the next time I go live, make sure you subscribe and you have the bell notifications turned on for all. So if we're staying above value area high, this will be one of the targets I would want to use as a runner. And keep in mind, anything above that high would be another new all-time high in this market. Then as we come over, we look at the QQQs real quick. What do we got going on? Basically a hammer-ish candle, small wick on the top, but a much larger wick on the bottom. Now, from a weekly perspective, I would give it to the bulls. However, in the context of an uptrend, this could be a hanging man candle, which is the weakest of all reversal patterns, but still something we would want to pay attention to. On the daily chart, you can see we have this upper level consolidation. When we zoom this out, we can see that we have all-time highs not that far away. Will the NASDAQ this week be able to join the cool kids club, make it another new all-time high? We dive down and look at the 4-hour chart. MACD indicator just kind of flatlined right there. Not a whole lot to see, but if we do start to get a break to the downside, I would want to look down here about 482.90. Then as we come over and look at the 30-minute chart, notice on Friday, we had that large gap on the way up. Then we had a very well-defined D as in dog shaped profile. So what does that signify? Hopefully you guys are able to see it, that we have an inside day. The low is nowhere close to the low from the prior day. The high is definitely lower than the high from the prior day. So come Monday, we expect a breakout or breakdown from this pattern. If we do start to break down, we know the gap is likely going to be in play. We can target gap support first at 493.31, then all the way down here for the gap to come back and get filled. As we jump over and we look at the futures markets real quick, what do we got going on? Well, we're closing right near the weekly point of control, which comes in at 20,482.75. We have value area high up here at 20,517.25, with value area low being 20,294.25. So for all intents and purposes, we have the potential. We want to be on the lookout. We can draw this two different ways, but we have a more conservative A to B equals C to D pattern that wants to complete at about 20,635. But keep in mind, for this pattern to be validated, we must take out the B point of this ABC pattern. If we don't, then, it's not going to be a validated ABC pattern. We look out here on the daily profiles. You can see we ran up and basically all New York session on Friday, chop, 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 chop. We did not go very far. And we have a P as in Paul shaped profile. And what that signifies is if we start breaking below value area low, highly probable we're going to explore the lower third of the range. And really where I'd be looking would be down here towards 20,390, which was value area low from the afternoon session and kind of right within this minus development area on the profile as well. Now the daily profile levels will come in at 20,505.50. The point of control will be 20,492.00 with value area low being 20,461.50. Now we come back over and we look at some of these charts real quick. I want you guys to pay very close attention. All right. If we look at Apple, notice what candle count number we're on. We already completed number 8. So that means come Monday, we have the opportunity to get a 9 count. And we'll talk about why that's important in a minute. Then we come over, look at the diamonds out here on the weekly. What do we got? We have a 9 count from the prior week as well. And also that also correlated with the S&P as well. So are we very near a top in the market? Maybe we go up one more week like we did there, something like this, and then we get a correction on the way down. Now, keep in mind, when we had this little correction right over here, that correction was good for about almost 10% on the S&P 500. Now, even if we come over and look at the IWM on the weekly, notice last week we completed an 8 count. Now, if you guys want to learn more about the 9 count indicator, which called the top for 1987 and the .com, make sure to watch this video right here.